Move on now and talk about what is a pip. So a pip is how the Forex market moves. It stands for percentage in points. And what's really important for you to understand is what a pip is. A pip is the fourth place after the decimal. So right here, we're looking at the euro dollar. This is the important part. What you really need to understand is that a single pip is the fourth place after the decimal. If we go 1, 2, 3, 4, which one of these numbers is a pip? The fourth one, so the 9 here is 1 pip. What that means is that if we go from 1.0709 on the euro dollar to 1.0708, we have now went down. The price of the euro against the dollar has went down 1 pip. So that's how you calculate and find a pip, and how much prices move is based on these pips. So let's go ahead and do another example here. What if we go to 1.0809? At this point, how many pips has price went up? Well, we've went up 100 pips. So the 9 is the ones, the 0 here would be the tens, the 7 would be the hundreds. That's how we calculate everything. Let's do 2 more examples really quickly. It's just easy math, so you should be able to get a hang of this pretty quickly. What if we go to 1.0710? How much did we go up? We went up 1 pip because we went from 09 to 10. One more example here. What if we go to 1.0701? How many pips did price move lower? We moved lower by 8 pips because we went from 0.9 to 0.1, meaning we went down 8 pips in this example. Now, this 4 decimal point to the pip is true for every currency pair except yen crosses, except pairs that have JPY in them. So what we're going to do now that you understand a regular currency pair in terms of pips, where the pip is, and how to determine how much a currency pairs went up and down using pips, let's now take a look at a JPY pair and where the pip is on those pairs. So as I said, on a regular currency pair, everything but yen pairs, the pip is going to be the fourth place after the decimal, which means we can't have that on a yen pair, because on yen pairs, we only have 2 places after the decimal. So for yen pairs, the pip is the second place after the decimal. So 1, 2, that would mean the 6 right here is the pip counter for the dollar yen. So if the dollar yen goes from 139.96 to 139.97, how much did the dollar yen go up? It went up by 1 pip. Let's do a couple more examples. What if we go to 139.86? How much did we go down? We went down by 10 pips. So now that you know what a pip is and how we can determine how much prices of a currency pair have went up and down by using pips, what is a pip worth? How to calculate the value of a pip is what we're going to take a look at right now. While in a trade in the Forex market, as the market moves up and down, we're obviously making and losing money depending on what position we have on. Now, with the market moving in pips, we need to know another side to this equation to understand what the value of each pip as price moves is going to be worth. How much is it going to take out and add to our account as prices go up and down? The way we determine that is through the position size that we are using. So each pip can be worth a completely different amount depending on your position size. Luckily, there are position size calculators that do all this work for us, but I'm going to show you a chart that gives you a general rule for position sizing and how much each pip will be worth based on the position size that you have. Let's take a look at that right now. So here that is, and what we can see here is a nano lot is about 100 units of currency. And 100 units of currency means that generally you'll be making and losing about 1 cent per pip. As we go up, you can see that these numbers go up. So as we go to a micro lot, which is 1,000 units of currency being your position size, you're gonna be making and losing about 10 cents per pip. As we go up to a mini lot, which is 10,000 units of currency, you're gonna be making and losing about $1 per pip. And as we go up to a standard lot, we're gonna be making and losing $10 for every single pip price moves up or down. So again, that is a generalization and a general rule of how much each pip is going to be worth. It's a little bit different for every currency pair, but this is a good generalization. And again,